This is Eric Muathe with Muathe.com. Let's take a look at a stock here. Now, keep in mind, we've come from the lows of 2009. Here we are trading. And this is a big move of a couple of, let's call it 10 years. Talking 20 here. Now at 210, give or take. So at some point, there's going to be a massive pullback. So one of the things that we can do is find out pretty much where the stock has run into trouble in the past. For example, we can take this line here for that break. And of course, we're talking about the break, major break here in 08, relatively speaking, that is. And then we can take that break line and extend it, of course, based on the uniformity principle, and we end up with exactly where the RSI is trading for now. Now, as a snippet of how the stock's been responding when it comes to this area, we can see that in the past, where there has been price resistance, for example, in this case here, this is where on a monthly closing basis we stalled. Now, I should have prefaced by saying this is all data monthly. So all data monthly. Each line here represents 1 month of price action. And even on the positive side, this line has been used by the stock for good moves, even support periods. And so what I'm trying to get at here is very simple. I'm sure you can already see that for yourself. And it is that if we are unable to move above the red line, and of course that's an if, but if we are unable to move above the red line, in other words, if we see that the stock is being rejected around this RSI level, then on a monthly basis, that does suggest that the next meaningful direction could actually be now to the downside. And again, the backdrop being that the stock has had a major run over the last 10 years or so. So I would watch this level here based on the uniformity principle. If you're not familiar with the uniformity principle, there should be some links in the description of the video explaining this in more detail. But that's the level I would watch. And if the stock is to go higher, well beyond current price levels, it would need to move above this red line. And I think that's a simple way of tracking these types of things. And we can see here that even the break of 2018 corresponded with a trendline break of the RSI based on the lows going into that break. And the lows I'm talking about are the lows connected here. This double bottom does give us a trend line, and once we broke below that, you can see the price reaction to the downside here. So we've come back to test a red line. Movement above the red line is definitely going to be a bullish aspect or a bullish undertaking. Set the stage for prices moving higher, just like we did here. And we also know that failure to move above the line, as an example, when we failed to move above the line here and broke below it, we had a pullback, which now looks very tiny, but percentage wise, a decent pullback. And again, that did correspond with a price trendline break. So I would watch this area for the next major swing trade, and a lot of the stocks out there have this similar type of feel where the monthly RSI uniformity is going to come into play. And again, if you're not familiar with the uniformity concept, take a look. There should be some links in the description of this video giving you a little bit more insight into this concept, which is my own derived, researched method. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. EACS. I am out.